Hi, welcome back everyone. This is Brian Neal again with the Swing Trading Beginners course. This is video number 7. This is our favorite, these are favorite reversal or bottoming patterns and a less stressful way to profit. Earlier in the course we talked about continuation patterns, and they can run a long way and they can make huge gains in a short period of time, but they tend to be more volatile, and they tend not to work as well during markets that are pulling back, that are consolidating, and they definitely don't work in bear markets. And now I'm going to teach you some strategies that work better during periods where the market's pulling back or consolidating. And even during a bear market, these sometimes work well too. And I'm going to show you a few of our favorites. Again, I'm Brian Neal, founder of Tradetobefree.com and InvestBefree.com, and I've been using these strategies for more than 12 years now. And you can go to our site and check out more about our strategies, our book, our video courses, and also our newsletter, which is free for 3 weeks with no credit card required. But right now, I want to talk about what we've been discussing so far in this course and the key areas you want to focus on to become a good swing trader. And those key areas are risk management. This is probably the first thing you should learn and understand, and it's very, very important. Okay, you also have to know candlestick charting, technical analysis, and you also should have a strong knowledge of top chart patterns. Another area you should focus on is understanding trend analysis in the context of candlestick charting and the chart patterns that we've been talking about. And you also want to know when a trend is likely to change. And we primarily want to focus on learning to trade the existing trend for a stock, usually where you want to place your emphasis. Okay, you also want to know and understand support and resistance, okay, moving averages, the VWAP, etc. And again, fundamental analysis becomes more important the longer you hold a stock. Okay, so for swing trading, where you're holding for a few days to a few weeks and even a few months in some cases with our strategies, it becomes even more important. One of the key differences between our strategies and our service is that we focus just on the top growth stocks in the market and also on companies beating estimates with rising future expectations. We get a slight edge over other market participants by focusing just on those stocks. Okay, so let's review of what this course talks about and the areas that you should focus on in learning swing trading. Okay, but in this video I'm going to talk about reversal patterns or bottoming patterns, and the top ones that we like to trade. And those are the rounding bottom pattern, the double bottom pattern, the explosive bottoming pattern, and also multiple patterns as well. So in this video I'm going to focus primarily on the rounding bottom. Okay, the rounding bottom pattern. Okay, now this is one of the best yet underutilized patterns in the market, especially for those swing trading in longer time frames. Now earlier in the course I talked about the importance of learning at least one or two good swing trading setups early in your trading career and really learn those patterns and trade them on a simulator. Make sure you're really good at trading those patterns before moving to a live account. Okay, and this is one of those patterns that would be really good to learn earlier in your trading career, or even if you're new to this type of pattern, it's a great one to learn, and it's probably one of the most reliable ones in the market, and one I think that's underutilized by a lot of traders. Okay, you can find this pattern on a 1-minute chart during the day to weekly charts over a year or longer. Okay, and we focus on the longer term patterns. Okay, some of the best swing trading opportunities in the market are those that are generating the larger patterns over several months to a year or more. And sometimes you'll see these patterns with a very smooth rounding shape to the bottom of the pattern on a weekly chart. Sometimes you'll see more of a choppy formation as it carves out that rounding pattern over a long period of time, and both can offer very good opportunities to swing trade and make money in the market. Okay, and the reason why we like this pattern so much is that on the right side of the base, as it's curling around and going higher again, it often goes through a period where it makes a really big move within a few weeks. And I'm going to show you an example of the rounding bottom pattern here from our newsletter, and it'll become a lot more clear how this pattern looks on a chart. Now this is Neophotonics. I had a prior video on this at the point that it reached its entry point that I published on YouTube, and lo and behold, it made a I think 70% move higher within several weeks after we published the video. So this was a very successful trade on Neophotonics, and it's a great example of the rounding bottom pattern, in this case within a strong long-term uptrend. All right, now so I've switched over to a weekly chart, okay, and this shows you the setup going into the point where it reached its entry point here in, I believe it's late June, early July. I think it was early July that we featured it. Okay, so we can see on the weekly chart the rounding shape to the pattern. And basically, rounding bottom pattern is simply a pullback, a reversal pattern where the stock slopes downward, okay, and the slope curls around and changes gradually to the upside, forming this sort of rounding shape on the pattern. And you can see that here in this rounding bottom pattern here, and also here. Okay, now this is a well-formed rounding bottom pattern on a weekly chart where you have a very clear rounding shape to it. Okay, and one of the great things about the setup was that it was within a longer term uptrend. Okay, so we can go back prior to 2015 or 2016. I think we'll see, we can go back to the beginning of 2016 and we can see we have a strong long-term uptrend in the stock leading into this pattern. And that's one of the things you want to look for with any of these patterns, is a strong long-term uptrend leading into it. And that's what we had here in Neophotonics. And I believe one reason why it works so well. Now, if we go back to a daily chart, we can see that going back to our entry point again when we featured the stock, as the stock curls around and starts making that turn to the right side of the base, okay, we want to find a spot where it's making a higher low and a higher high. Okay, so in this case with Neophotonics, we can see that we're making a higher low here, okay, followed by a higher high here, and that's where we like to enter the trade. Okay, and if there's a nearby resistance area, in this case it was around $10, that's going to act as some resistance. We can see we hit that point in the past and found resistance near that point. So around those whole dollar amounts, $10, $9, $11 price points, you often find resistance. So we wanted to wait to see if we got back above that, and also back above the 200-day moving average, which we want to see before we enter a trade. Okay, so we can see that it hit that entry point and started making the move from there. But that higher low followed by the higher high on a daily chart is our entry point on that right side of the base after we've identified the rounding features to the pattern. And again, finding a longer term uptrend is important as well by looking at a chart over the past 2-3 years. Okay, so that's the entry point in this pattern. Now, one thing you can do with this, if you want to play a tight stop, is put a stop, say about 3.5% below that higher high. So when you start making that higher high, that prior high, 3.5% below that point would be a good stop loss if you want to play with a tight stop loss. Another good stop loss, if you want to give it more room, is below the prior low. And the classic stop loss in this pattern is going below the low in the pattern, so in which case was 849. Now, with this setup, that's more than a 10-15% stop, which is a little bit big and a little wide even for swing trading. And so we wanted to find a tighter stop loss on this. And like I said, if you want to play with a real tight stop loss, you can drop 3.5% below this point or below the prior low. Okay, and we can see that after it hit the entry point, it made a very strong move. And if it gets off to a strong start here, you can start to look for follow-on entry points. Okay, so one good point is if it starts to break another high. Okay, so here we can see that we pulled back for a few days. We hit the 9 EMA, the 9 exponential moving average, which is one of the moving averages you have an option for in your charts. And it hit that point and started to go above there and take off from that point. So that could be a place for a follow-on entry point on those that get off to a strong start. Now, one good exit point would be back to the old highs in the pattern. So the left side of the base, say here or here. It's a good exit point. You can keep some shares and wait till it goes above there to see if it starts to move higher. And if it continues to act very strong, one really good exit point is a close below the 20 EMA, and then after that close below the 20 EMA, a breaking of that candle the next day. That's a really good stop loss point. Another good stop loss point is waiting for it to close below the 9 EMA, okay, and then sell into the next rally. That's another good way to play the final exit point in this trade. You can also keep it until it closes below the 50 if you want to give it even more room. But one of the best ways to play these is to go ahead and hold some of your shares until it closes below the 20 EMA and then closes below that candle the next trading day. Because oftentimes when you close below the 20 EMA with these stocks that are making a strong move over a number of weeks, they'll often close below the 20 EMA and then rebound strongly the next day and take another leg higher. Okay, and you can sell into that next leg as it goes above new highs, putting a stop below the prior day's low if it does rebound strongly after closing below that 20 EMA. So that's a really good example of a high quality, what I would call high quality rounding bottom pattern. Okay, and that's more of a smooth pattern on a weekly chart, which is where you want to find these patterns mostly on a weekly chart. Okay, so when you bring that weekly chart up, you can see that rounding shape more clearly on that chart, and then go back to the daily chart and again look for that higher low followed by the higher high. Okay, a more aggressive point of entry would be after it makes the higher low and has a candle over candle pattern, meaning it closes above the prior day's high, okay, and then moves above that prior day's candle the next day. That could be another good entry point as well, and more aggressive on this trading setup. Okay, but once it starts making the higher high on the right side of the base, you should see that point act as strong support. Okay, if you don't, especially if you're playing this during the day on a 5-minute chart, let's say during the day, you want to see that prior high on the right side of the base as it's rounding around act as strong support, and if it starts moving below that point, that's usually a good indication that it won't make a big move, like this one did on a daily chart. Okay, so it's a very effective pattern. Not all the patterns are this well defined. On a weekly chart, we have that nice rounding feature. Sometimes they're more choppy, and I'm going to show you another example in a more recent newsletter of a more choppy pattern on a stock that has been a strong growth stock in the past that lost favor for a while, had a big pullback, and started to round around again on a longer term time frame. And this is Chipotle Mexican, and it's been one of the top growth stocks for the past decade or so. Had a problem with the quality of their food, and some people that got sick eating at the restaurant, and subsequently the stock took a big spill, pulled back a lot, but you can again see this rounding shape starting to appear on the chart where you've got this rounding pattern. You can see more the rounding feature more on the highs curling around to the right side of the base. You can also see that rounding feature on the lows too over time too, but you can tell with this chart it's more of a choppy rounding bottom, and that's okay too. And this can also be a very good setup on these longer time frames, and also when the charts are more choppy like this. Okay, but again, it's the higher low followed by the higher high. It's generally the good entry point, and putting either tight stop in there, 3.5% below the target entry point, or below the prior low. Okay, so if we switch now to a daily chart of Chipotle, and we can see that we feature the stock here as it broke a downtrend on the right side of the base, but we recognize the rounding feature over a longer term time frame by looking at the daily chart, but also looking at the weekly chart. Okay, and then once we saw that downtrend break that wasn't as steep as the prior pullback, we could tell that the stock was strengthening and also getting above the 200-day moving average. Okay, and we saw formation here where it made a very strong move out of that pullback, that short-term downtrend here, and then once it broke above that high, was another good entry point. And we can see that the stock is now making a very strong move. It's already up, 20% from almost 20% from our target entry point on this large rounding bottom. Okay. Now this stock, we know, has had a very strong track record of growing sales and earnings at a high clip for a number of years, and was a Wall Street darling and a top growth stock for many years. So we know the management has what it takes to pull off the great numbers and to carry a high valuation in the future. And the problem that they ran into is one that they could correct, and they are correcting. And we can see that it's slowly gaining favor again among funds and institutional managers as it forms this large rounding bottom pattern. And we know it can get back to the old highs. That's very possible. And with that, and with the strong technical pattern, and finding a good entry point in that technical pattern, we can have a very good risk-reward ratio and a great swing trade, which we nailed here for subscribers in this, again, large, more choppy rounding bottom pattern. So we can also find these patterns on a short-term time frame too. So we can give you another example here for a stock that we featured recently in January on Tech Resources, I believe is the name of the company. And here's another good example of a rounding bottom on a shorter term time frame over the past few weeks. Now you can find this pattern within a strong uptrend, and often it's referred to as a J-hook pattern. Okay, but it's still a rounding pattern where you've got that very sharp decline initially, and that rate of descent slowly turns around, gradually curves in that rounding pattern, and the stock starts going the other way on the right side of the pattern. Okay, and again, on the short-term time frames, the entry point is a higher low followed by the higher high. So once it starts making the higher high, here is where you want to enter the trade. And again, you can definitely put a very tight stop loss of 3.5% on the shorter-term time frames when you find these trades on short-term time frames, or below the prior low. Okay, and they often do very well within these strong uptrends. And we can see, if we go look at Tech, what it did after it reached the entry point, we can see it moved back to the highs, which is very common in this pattern. In this case, it didn't exceed the highs and go beyond them, but this stock made a nice 15%, 20% move within a couple weeks. Okay, so it's a very, very good chart pattern to trade. As you get up in the trade, you want to start to take some off at, say, 4% to 10%. Take a little off there, stop it at your entry point, and then let the rest run if it continues to behave well. All right, so that's some good examples of the rounding bottom pattern. It's definitely one you want to have in your arsenal of trading, no matter how experienced you are. If you're beginning, it's a very good one to start with. And again, if you can find them within the longer term uptrends or on stocks that have the proven track record, at least in the past, of pulling off very strong growth in sales and earnings, that's a great way to get a little bit of an edge over other traders. Okay, I also want to touch upon day trading too. If you find this pattern intraday, it can also be very good too. But you also want to focus early in the day when you day trade, before 11 a.m. to find this pattern, and also late in the day after 2, 3 p.m. If you see this pattern hit the entry point. They tend not to work as well during the time between 11 a.m. and 1 p.m. But if you have a very strong runner that day, a stock that's up 10, 15, 20%, and still above its open price, it can often form this pattern, this rounding pattern, early in the day or late in the day, and make a nice move out of that pattern. It's not as reliable between the time, say, between 11 a.m. and 1 p.m. or 2 p.m. But you can also find these when you day trade, strong stocks making strong moves that day. Again, with the exit point on this trade, very often it's the top of the pattern. Okay, now the rounding bottom pattern, especially on these larger patterns, sometimes form a handle. and they become what we call a cup with handle pattern. And you'll hear that term used often by top growth stock traders. And it's a close cousin to the rounding bottom, and rounding bottoms can become cup with handle patterns. And if you see that, and if you see that consolidation on the right side of the base, and you see that moves sideways to lower, that's a good sign. And if it breaks out of the consolidation, it often makes a nice move higher quickly, which we saw with Neophotonics. Okay, now you want to focus on the ones that get off to a strong start. Look for good follow-on entry points for those. Ones that get off to a weak start, you want to just think about taking the position off earlier on in the trade. Okay, and one thing you can do is you can put a starter position out there and start with a small position and then add to it if it starts to act well right away. Okay. Okay, I think I talked about that before, where if it gets off to a real strong start, you can wait until to sell the final shares, your final part of your position, of your initial position, when it closes below the 20 EMA, and then it goes below that day's candle the next day. Okay, because again, oftentimes if it gets off to a strong start, it'll close below the 20 EMA or around it, and then have a strong rebound from there the next day into new highs and another leg higher. Okay, so be aware of that and look for the close below the 20 EMA and a close, or a move below that as a sign to get out of the trade. Okay, our next video will be about the double bottom pattern. Okay, this is another very good reversal pattern. And again, even though it's a bottoming pattern or reversal pattern where the trend is changing to the upside, okay, it's also really great to find these patterns within a strong long-term uptrend. Okay, and that's one of the keys to success, is understanding the different trends on different time frames. Okay, and that's why we want to start with the long-term chart first, and then look at the daily chart and then find these patterns in shorter time frames within that longer-term uptrend. So, okay, well, thanks for listening, and that next video is coming out soon. Again, like the video down below if you liked it and want to see more. Leave a comment down below if you want to know more. Okay, go to our site. We have that 3-week free trial where we'll send you these setups as they emerge. Again, just on those stocks with very strong, consistent growth in sales and earnings for a number of years, and also companies beating estimates with rising future expectations. Those will give you the slight edge that we all want to have over the rest of the market participants, and you can do that by going to our site and signing up for that 3 free-week trial. There's no credit card required, and also we have a great course on the explosive bottoming pattern, which actually has a higher reliability than the rounding bottom pattern and other patterns taught in this course, and is a great place to start if you're a new trader. And you can go to our site and view that free presentation on that pattern, and it's a really, really great chart pattern to trade, and can do very, very well for you. So go ahead and check that out too, and I will see you in the next video.